54, 54F, 54EC read with 50C. So I have just tried to, cull out all the case laws, remove all the issues. And I have got around about, 30 issues in all for all the sections to deliberate among this knowledgeable crowd. What I would do is, the presentation runs into around 260 plus slides are there, around about 262 slides. I've shared the presentation with Sharmaji. Let us try to go through all the issues, and there may not be one single answer for the issues. But let me tell you, my dear friends, the speciality of this presentation is now, what I have done is, I have taken all the case laws which are in favor of the appellant. There may be case laws which are also against in favor of the revenue, but I am not bothered about that. Neither I am going to lay emphasis or discuss on those case laws. I am only bothered on the case laws which are in favor of the appellant. So that would help us to deliberate, discuss, argue in the tribunal or before the CIT appeals in your faceless regime in your tribunal and as well as in the High Court, etc. So I am not telling that there may not be case laws against also, but as I told you, we are positive, optimistic, forward looking, and then we are trying to discuss only the case laws in favor of the assessee. Now, let me take you through my presentation. Yeah. So we'll not discuss the section as such 50 and 54 and 54F. Now 54EC, we'll straight away dive deep into the issues. And then we will see, as and how it progresses. We will try to take questions also and discuss. Now, issue number 1. Now, my dear friends, whether the benefit of exemption under 54, 54F is available in case the new asset is used partly for residential and partly for commercial purpose. Now, this is held in, in favor of the SSA by the Indore bench, Indore tribunal. In the case law is Ashok Kukreja, delivered in 2021. So what has happened here is there is a ground floor and there is a first floor. So in this ground floor, there are shops. There are shops which are utilized for obviously for commercial activities, and the shops are obviously on the ground floor, whereas the first floor is to be utilized for residential purpose. So here the assessee has purchased the property as a residential property, and the registering authority have also registered the said purchase after charging expenses, valuing the property for a stamp duty value as a residential property. And also the electricity department had also considered the use of said premises as a residential use and also has charged the electricity rates accordingly. Further, the municipal authorities have also charged the property tax, treating it as a residential property. Now, so ultimately the decision given by the tribunal is, the assessee has rightly claimed exemption under 54F for the purchase of residential house property located at the first floor of a complex having shops constructed on the second floor. So therefore, the tribunal has allowed this appeal. Now come to issue number 2. Is the benefit of 54F available in case the new asset is used for commercial purpose in future? See, I have purchased a property today. I have, complied with all the conditions of 54F, etc. Is it necessary that I should use this property as my residence? Can't I let it out? Can't I, use it as a restaurant, etc.? The nature of the property remains residential as such, but I'm using the property, I'm exploiting the property. I want to let it out. Example, it remains a residential property. I want to, let it out to a restaurant. Example, I'm telling them, you give me rent, I want to let it out. So the whole crux, this matter is covered in Honorable High Court of Madras in Ramesh Sharaf, judgment delivered in 2020. So in this, what is the court is telling is, in respect of the eligibility to claim deduction 54F, the tribunal rightly took the view and based on the certificate issued by the executive engineer of the Chennai Corporation, saying that the building is situated in a primary residential zone and the building plan has been sanctioned for residential purpose only. So this was a case of reopening. Therefore, even in the reopening proceedings, the High Court is telling, the assessing officer did not dispute the fact that property which was purchased was a residential property situated at the distance of more than 18 kilometers from the outer limits of the nearest municipality, but held against the assessee on the ground that within few months, the property, which was a residential property, was let out for commercial purpose to run the restaurant. So here the grouse of the assessee starts. They are telling, no doubt, these facts are not disputed. What is not disputed? Yes, the property which was purchased was a residential property, not disputed. This is situated at a distance of more than 18 kilometers from the outer limits of nearest municipality, not disputed. However, he is telling that this residential property was let out for commercial purpose to run a restaurant. So now the court is now, giving its decision. They are telling there are several instances where residential properties are put to use for non-residential purposes, and this cannot be a test to decide the nature of property under the provisions of the Income Tax Act, especially in the assessee's case, where the letting out of property for non-residential purpose was much after the purchase on 3rd of February 2011, and the lease agreement was on 21st of March 2011. So far as the wealth tax assessment is concerned, at that time, wealth tax assessment, it may be true that in the assessment, the property is shown as a commercial complex. See, once it is shown as a commercial complex, obviously in the Wealth Tax Act, it was exempt. Let out for more than 300 days, residential property and used for commercial complex, etc., it was exempt. As on the relevant date, March 11, property was leased out for commercial purpose. Therefore, the tribunal was right in holding that the assessee would be entitled to claim deduction in 54F of the Act and also rightly restricted to the residential portion only. For all the above reasons, the appeal filed by revenue is dismissed and substantial questions of law are answered against the revenue, no cost. Take your Bombay, Mumbai tribunal judgment delivered on 30th of August 2006 in SK Luthra versus ITO, wherein the Honorable Tribunal is telling, once the residential house property has been purchased within the stipulated time, that is 1 year back, 2 years forward, or within 3 years from the date of transfer, you purchased as land, construct a house, etc., the basic conditions. The assessee is entitled for exemption 54F, irrespective of the subsequent use of the property. Important words, irrespective of the subsequent use of the property, which is irrelevant. You purchased a house property, you sold house property, or in case of a 54F, you sold jewelry, you invested in house property within 1 year before the date of transfer, or within 2 years after the date of transfer, an outright purchase, or within 3 years from the date of transfer, you purchased a site, constructed a house, etc. Having fulfilled the conditions, you are supposed to be easily, you can claim 54F. However, what the court is telling is, what happens to the subsequent use of the property? They are telling that is irrelevant. In this case, the assessee purchased a new asset, obtained exemption 54F, subsequently started using it for his coaching classes, and thereafter let out to the same company, to a company for business purpose. So if you see the paragraph 9 of the judgment tribunal, it says the law has not stated anything. Honorable tribunal is telling, law has not stated anything on matters relating to which property is put to use or residential property purchased or constructed by the assessee in such circumstances may be kept unoccupied for quite a long time. In that case, the benefit cannot be denied on the ground that the assessee and his family did not stay in that property for a long time. Therefore, the insistence of the assessing officer that the assessee and his family did not stay in the new residential flat is not sufficient to decide the matter. The court further goes on to say, the tribunal, only condition specified in 54F is that consideration received on sale of old asset is not diverted, but it is used for acquiring or constructing a residential property. This legal aspect was not considered by the learned assessing officer either in the first proceedings or in the second proceedings. There may be a situation where the assessee has later on, after the purchase of property, put the property for commercial use. That may be a violation of rules governing housing cooperative society or apartment rules. Like in your Maharashtra, for example, the residential flat is a housing cooperative society in apartment buildings. So under the provisions of Maharashtra Housing Cooperative Societies Act, etc., and relevant rules, apartment in a housing society is invariably identified as a residential flat. Now, what are they telling? It has no direct, although it may be violation of rules governing housing cooperative society or apartment rules, it has no direct bearing with the provisions of the Income Tax Act. Therefore, there is no sanctity in probing into the intention of assessee in purchasing the residential property. They are all ifs and buts, but quite unwanted in interpreting the provisions of law contained in 54F. Nothing is permanent for that matter in this world. A residential property today may be a commercial property tomorrow, and the commercial property of present may be a residential property tomorrow. It all depends on the contemporaneous circumstances. Take a hypothetical case. The tribunal is telling an assessee purchases a property within the prescribed time. After that, the property gets destroyed, annihilated, demolished, etc. gets destroyed. Is not the assessee entitled for benefit of 54F? Crucial test to be applied is whether the assessee has applied the sale consideration for acquiring or purchasing the new asset in the form of residential property. The two conditions are very important. Application of fund. What did you do with the sale consideration and the new asset? What did you do with the sale consideration? What was the asset purchased? Yes, sir. The new asset was in the nature of residential property. Matter ends. I am not going to go deep into the case further. Subsequent developments or future events are not crucial in deciding the matter. Now, third issue. Whether after purchase of residential house, another interesting issue, whether after purchase of residential house, expenditure incurred on making the house habitable would also qualify for deduction 54F. Please understand the issue. After purchase of residential house, expenditure incurred on making the house habitable would also qualify for deduction at 54F. Now, Mumbai bench of IT 18, Salim Faisal Boy versus DCIT has held that expenditure incurred in making the house habitable will also qualify for exemption 54F, as unless a house purchased is fit enough for living, it cannot be residential. Then the tribunal goes on to make a distinction between habitable and comfortable. Hey, you want to make a house habitable? No problem. Whatever expenditure incurred, allowed. 54F. You want to make a house comfortable? Please stop. I am not going to allow that exemption. You cannot add that cost spent on making the house comfortable as against habitable and add it to the cost of acquisition to be claimed as deduction or exemption on 54F. However, no exemption is allowed if expenditure is incurred to make the house comfortable, as there is a difference between habitable and comfortable. You see the para 7 of the tribunal, what the tribunal is telling. Investment in residential house would not only include cost of purchase, but also cost incurred in making the house habitable. No problem. Then the tribunal says, in an inhabitable premises, in our opinion, cannot be equated with a residential house. If one person cannot live in a premises, then such premises cannot be considered a residential house. In the modern age, the builder may provide semi-finished house or complete house, depending upon the price agreed to between the parties. In case of semi-finished house, the purchaser will have to invest on flooring, wooden work, sanitary work, etc. to make it habitable. Therefore, in our view, the investment in house would be complete only when such house becomes habitable. Similar view has also been taken by the SMC bench, single member of tribunal, in the case of Sonia Gulati versus ITO. Accordingly, we hold in principle that the expenditure incurred on making the house habitable should be considered as investment in purchase of house, subject to other conditions, that the payment was made during the period specified in 54F. Now, again, they are giving the distinction. Before parting, we would like to mention there is a distinction between expenditure incurred on making the house habitable and expenditure on renovation. We may visualize a situation where assessee may buy a habitable house, but the assessee would like to incur further expenditure by way of renovation to make it more comfortable. He may not be happy with the quality of material used by the builder, and therefore he may incur the expenditure on improvement of the house. Such expenditure cannot be equated with the expenditure on making the house habitable. Whether the house purchased by the assessee was in a habitable condition or not would depend on the state of condition of the house at the time of purchase. Move further. Similarly, in this Chennai bench, Sambandham Dorairaj case delivered in 2021 by Chennai Tribunal. In this case, assessee was residing in Mumbai. He purchased one old house in Chennai. Subsequently, repairs are carried out in the house. And at that time, the author representative of the assessee submitted before the honorable tribunal that, look here, members, the repairs was carried out by the assessee long back. He also submitted that the entire repair works, improvements carried out by his relatives who were in Chennai, and therefore he is residing in Mumbai. He is not able to collect the bills and vouchers. You see the magnanimity. I am telling you, wherever 54 is there, the courts, the tribunals, they are all magnanimous in their decisions. You have a lot of beneficial. Take my Karnataka High Court. They have given such brilliant decisions where I've got a lot of relief, a lot of exemptions. Anyway, so in this case, what has happened? Inspector has inquired with the neighbors. The inspector, he was deputed there. You please go and see the house and give me a report. The inspector came and inquired with the neighbors, and neighbors stated before him that they are not aware of the improvements carried out by the assessee. Mainly based on the inquiries made with the neighbors, he came to the conclusion that assessee has not carried out any improvement work and disallowed the entire expenditure. Then the appeal, the assessing officer made this addition based on the inspector's report. So appeal was carried to CIT appeals. Learned CIT appeals told that if the AO wanted to know exactly about the improvement work carried out by the assessee, he should have been inquired through a builder who constructed the building and not the neighbors. Keeping in view the above, and also by considering all factors, and also taken into consideration that the assessee is not residing at Chennai, he is only residing at Mumbai. Honorable tribunal says, honorable court says, he disallowed an amount of only 5 lakhs for lack of evidence and directed the AO to allow benefit on 54 to the extent of 18 lakhs. We have also gone through the entire order of CIT appeals. We find that the disallowance made by learned CIT appeals to the extent of 5 lakhs, what the CIT appeals made that, and which is also confirmed by the tribunal now, is fair and reasonable. Tribunal is telling it is fair and reasonable, and we find that no interference is called for. Take the case of, ITAT Mumbai, in case of Gulshan Banu or Mukhi. Whether expenditure to make a residential house habitable will be included in the cost of new asset. The words used are amount spent on purchase of new asset are cost thereto and not price thereto. Therefore, the cost includes purchase as well. Consequently, the words used signify that the amount of purchase will include other necessary expenditure in this behalf to make a residential house habitable, and taken together, that will be the cost of new asset. The tribunal has perused the items of the report of the architect. Residential house was in a state of general disrepair and was inhabitable. Consequently, the necessary repairs carried out to make the same habitable would constitute part of the new house. Come to issue number 4. Whether in claim of 54 or 54F, extent of construction of residential building. Very interesting decision. This will be of Dr. Balaji. Whether in claim of section 54F, extent of construction of residential building and facilities provided in such building are relevant. Take this judgment of my Karnataka High Court in Dr. R. Balaji's case, rendered back in 2014, 41taxman.com. In terms of 54F, when the assessee invests sale consideration in purchase of a residential property within the prescribed time period, he is entitled to claim deduction, and in such a case, extent of construction of residential building and facilities provided in such building are not relevant. See what has happened? The High Court is now telling that the orders of lower authorities are based on the report submitted by the inspector who visited the place 3 years after the sale. Please listen very carefully the language of the court. Court is telling inspector has gone after 3 years after the sale. Based on the report submitted by the inspector who visited the place 3 years after the sale. On the day he inspected, there was a shed constructed for living of the watchman and to store the building material of the neighbor of the assessee who was putting up a construction. Now, the assessee is a doctor. So, inspector has visited the premises after 3 years after the sale. On the day he inspected, there was a shed constructed for living of the watchman and to store the building material of the neighbor of the assessee who was putting up a construction. That is not a building which is referred to in the sale deed. On the day the property was purchased, a residential structure measuring about 200 square feet was in existence. photograph which was produced by the assessee even before the authorities demonstrate this said fact. Maybe that structure is not palatial. Court is telling the structure is not palatial, it does not have all civic amenities, but that was the status of the vendor of the assessee. He sold the site to the assessee who is a doctor by profession. What the law contemplates is, after selling the property, if the assessee invests the sale consideration in purchase of residential property, he is entitled to exemption. What should be the extent of residential building? What facilities should be provided in such construction to be eligible for exemption is not set out in the act at all. All that the authorities have to look into is whether what is purchased is a residential construction or not. If the material on record shows prior to sale, the vendor lived there with his family and he has sold the site along with the residential construction merely because the property is not suitable to the assessee and construction material are kept there, is not a ground to deny exemption under 54F of the Act. These are the wordings of the Karnataka High Court. Issue number 5. Whether deduction can be allowed under 54F when capital gains are invested in remodeling or addition of floors to an existing property. This is there since time immemorial, but since when it was introduced. Remodeling or addition of floors to an existing property. Take case of CIT versus PV Narasimhan, Chennai Madras High Court. Exemption 54 is allowable for addition of floor to the existing house on the sale proceeds of residential house sold. Assessee owned 2 residential houses. He sold 1 house, utilized his sale proceeds to construct first floor on his second house after demolishing old structure. In this case, exemption will be allowable under section 54. BB Sarkar, the question before Calcutta High Court was whether exemption under 54 can be claimed on construction of an additional floor in the new asset purchased. Court allowed the assessee's claim. Now, one more situation. Issue number 6. Whether agreement to sell amounts to sale of immovable property. Now we are on the concept of agreement to sell. Whether agreement to sell amounts to sale of immovable property, entitling the assessee for claiming exemption under 54F. So you know this judgment of Sanjeev Lal delivered in 2014. The question before the Honorable Supreme Court was whether the agreement to sell, which was executed on 27th of December 2002, can be considered as a date on which the property, that is the residential house, had been transferred. Normally, what is happening when you execute an agreement to sell in respect of an immovable property, a right in personam is created in favor of the transferee by the transferor. When such a right is created in favor of the transferee, then the transferor is restrained from selling the said property to someone else because the transferee whose favor the right in personam is created obviously has the legitimate right to enforce specific performance of the agreement. If the transferor for some other reason is not executing the sale deed. Thus, by virtue of the agreement to sell, some right is given by the transferor to the transferee. What the Supreme Court is telling, some agreement by virtue of the sale agreement, some right is given to the transferor, to the transferee by the transferor. By virtue of agreement to sell, some right is given by the transferor to the transferee. No problem. The question is before the Supreme Court is whether the entire property can be said to have been sold at the time when the agreement to sell is entered into. In normal circumstances, aforesaid question has to be answered in the negative. Obviously, this should be followed by registration of sale deed, execution of sale deed, and then only you can said to have been transferred the property. But the Supreme Court is telling, wait. Now look at the provisions of 2(47) of the Act, which defines the word transfer in relation to a capital asset. So Supreme Court is telling, when I look at the definition of 247, transfer of capital asset, there is a wording, there is a line, what it says, extinguishment of any right therein. So Supreme Court is telling, when I see 247, one can say if a right in property is extinguished by execution of an agreement to sell, the capital asset can be deemed to have been transferred. Relevant portion of 247 defining the word transferred is as under extinguish any rights therein. Now, in light of definition of transfer as defined under 247, it is clear when any right in respect of any capital asset is extinguished and that right is transferred to someone, it would amount to transfer of a capital asset. In light of the aforestated definition, now the Supreme Court is telling, let us look at the facts of the case. What are the facts of the case? Sanjeev Lal's case. Number one, agreement to sell in respect of capital asset executed on 27 December 2002. Obviously for transferring the residential house or your original asset in question, and 15 lakhs was received by way of earnest money, that is your advance. It is also not in dispute that the sale deed could not be executed. You executed the sale agreement. Why couldn't you execute the sale deed? Because of pendency of litigation between Sri Ranjit Lal on one hand and the appellants on the other, as Sri Ranjit Lal had challenged the validity of the will under which the property had devolved upon the appellants. Okay, sir. By virtue of an order passed in the suit filed by Ranjit Lal, appellants were restrained from dealing with the said residential house, and a law-abiding citizen cannot be expected to violate the direction of a court by executing a sale deed in favor of a third party while being restrained from doing so. Therefore, in the circumstances, for a justifiable reason, which was not within the control of the appellant, they could not execute the sale deed. And the sale deed had been registered only on 24th September 2004. After the suit filed by Sri Ranjit Lal challenging the validity of will had been dismissed. So therefore, in light of aforesaid facts, in view of the definition of the term transfer, one can come to a conclusion that some right in respect of capital asset in question had been transferred in favor of the vendee, and therefore some right which the appellants had in respect of the capital asset in question had been extinguished, because after execution of agreement to sell, it is not open to the appellants to sell the property to someone else in accordance with law. Therefore, what are they telling? Ultimately, yes, consequences of execution of agreement to sell are also very clear, and they are to the effect that the appellants could not have sold property to someone else. In our opinion, such an act, Supreme Court is telling, our opinion, such an act would not be in accordance with law, because once an agreement to sell is executed in favor of one person, the said person gets a right to get the property transferred in his favor by filing a suit for specific performance. And therefore, without hesitation, we can say that some right in respect of the said property belonging to the appellants had been extinguished, some right had been created in favor of the vendee transferee when agreement to sell had been executed. Therefore, thus a right in respect of capital asset, the property in question had been transferred by the appellant in favor of the vendee or transferred on 27 December 2002. The sale deed could not be executed for the reason that the appellants had been prevented from dealing with the residential house by an order of a competent court, which they could not have violated. In view of the aforestated peculiar facts of the case and looking at the definition of transfer, extinguishment of right under 2 within bracket 47, we are of the view that the appellants were entitled to relief under 54 in respect of the long-term capital gain which they had earned in pursuance of transfer of their residential property. One more paragraph, very interesting, where the court is telling, yes, what is the court telling here again? The intention of legislature or the purpose with which the said provision has been incorporated in the act is also very clear, that assessee should be given some relief. What is the purpose of 54? To give some relief. Therefore, Supreme Court is telling, it is very clear why the provision has been enacted, incorporated, introduced in the statute to give relief to the assessee. Then the Supreme Court is telling, though it has been very often said that common sense is a stranger and an incompatible partner to the Income Tax Act, and it's also said that equity and tax are strangers to each other, still this court has often observed the purposive interpretation. Supreme Court is telling, give purposive interpretation to the provisions of the act so that it can be utilized. It can be utilized because it's a beneficial provision. So you have to give a purposive interpretation and not to make the provision strict interpretation, not to make the provision nugatory or unworkable. In the case of Oxford University Press versus CIT, this court, Supreme Court, had observed that a purposive interpretation of provisions of the act should be given while considering a claim for exemption from tax. It has also been said that the harmonious construction of provisions which will subserve the object and purpose should also be made while construing any of the provisions of the act, more particularly when one is concerned with an exemption from payment of tax. This Supreme Court judgment was the basis for giving relief by the Kolkata Tribunal in Gautam Jhunjhunwala's case in 2018, wherein on same facts, the tribunal relying on Sanjeev Lal's Sanjeev Lal's case, allowed the benefit to the assessee based on only agreement to sell, where the assessee purchased a new residential property within 1 year prior to the date of execution of agreement to sell. Please understand, execution of agreement to sell owned by him, assessee's claim for deduction 54 was to be allowed. Please see here, assessee entered into an agreement to sell a flat on 16/9/11. Understand carefully. This assessment year 12/13, sir? Yes. So assessee entered into an agreement to sell a flat on 16/9/11. Out of this agreed sale consideration, certain amount was received by way of advance money. Sale deed of the flat registered on 27/12/11. Sale deed registered on 27/12/11. Assessee purchased a new residential flat on 4/10/2010. Therefore, assessee's claim for deduction under 54F denied on the ground obviously did not purchase residential flat within 1 year. Why? 4/10/2010. And he is telling the sale deed of flat registered on 27/12/2010. It is beyond 1 year. But please see the date of agreement. It is 16/9/11. So for the said purpose, assessing officer obviously will not allow. Assessing officer took the date of registration of property sold as date of transfer 27/12/11. Whether once assessee executed agreement to sell property in favor of the vendee, said vendee got a right to get property transferred in his favor by filing a suit under Specific Performance Act. Very simple, sir. Agreement to sell is, or the sale deed or agreement to sell is followed up by execution of sale deed. Therefore, the date of sale agreement is important. It is not that the sale agreement was cancelled. That all the court is telling. You see, where once the assessee executed agreement to sell property in favor of the vendee, the said vendee got a right to get property transferred in his favor by filing a suit under Specific Performance Act. Therefore, some right in respect of said property had been transferred in favor of vendee on the date of execution of agreement to sell itself. Held yes. Whether since it was undisputed the assessee had purchased a new residential property within 1 year prior to the date of execution of agreement to sell. Agreement to sell is 16/9/11 and purchased a new residential flat on 4/10. Yes, sir. 4/10/10 and sale deed registered on 27/12/11. So therefore, he is telling yes, undisputed assessee purchased new residential property within 1 year prior to date of execution of agreement to sell. Impugned order set aside. Moving further. So this again the discussion. The tribunal discussing about Sanjeev Lal's case. Move forward. Again, if you see at the end, the tribunal is telling, or no, this is in in the light of discussion, we are of the opinion that though the agreement to sell is not registered, again, see the benefit. Even though the agreement to sell is not registered, the vendee can seek decree of specific performance on the basis of unregistered agreement also to sell in accordance with law, as laid down by Honorable Delhi High Court in Devinder Singh versus Hari Singh and Honorable Madhya Pradesh High Court in Akshay Dugad versus Lakshman Rao Dhole, etc. Now, issue number 7. Whether exemption under 54/54F is available to the assessee if the new asset is purchased in joint name of assessee together with some family members such as husband, wife, daughter, son, legal heir, etc. So, lot of judgments are there where entire consideration which is paid by the assessee himself, he is entitled to full exemption under 54 even if the property has been purchased in a joint name with other family members. Kamalwal's case, Delhi High Court, his wife Ravinder Kumar Arora, again Delhi High Court. In case of wife, obviously it is Kamalwal, Ravinder Arora, Lakshmi Narayan. Then Gurnam Singh, his son Ravinder Kumar Arora. Karnataka High Court in Jennifer Bide, that is husband. N. Ram Kumar, minor daughter. Bangalore bench, Krishnappa Jairamaya, it's a widowed daughter. Then Mir Ghulam Ali Khan, legal heir. Then here in this Chandigarh, Rachna Arora, assessee, daughter and son-in-law. Tribunal goes to the extent of giving relief, assessee, daughter and son-in-law. You are getting relief. So in there, if you see Lakshmi Narayan versus CIT, Rajasthan High Court, in name of wife, on the ground of investment made by assessee in name of wife in view of the decision of Delhi High Court in Sunbeam, other judgments of different high courts, word used is assessee has to invest. It is not specified that it is to be in the name of assessee. So the wordings of the section says assessee has to invest, not that the property should be in the name of the assessee. So therefore, the court allowed the deduction claim in name of the assessee, although the investment was done in his wife's name. Same thing, Kamalwal. Again, in this Kamalwal's case, the court is relying on, again, Madras High Court judgment in V. Natarajan and that of Andhra Pradesh High Court in Mir Ghulam Ali Khan. Then again, they refer to other judgments, including Karnataka High Court in Jennifer Bide's case, and also Bombay High Court in Prakash versus ITO. But see here, the court is distinguishing also. It is also noted judgment of Bombay High Court in Prakash versus ITO, in which a contrary view was taken. But it preferred the view taken by Madras and Karnataka High Court, adopting the rule laid down by Supreme Court in CIT versus Vegetable Products, which says that if a statutory provision is capable of more than one view, then the view which favors the taxpayer should be preferred. The tribunal also observed that the section 54F, being a beneficial provision enacted for encouraging investment in residential houses, should be liberally interpreted. Move further. Yes, Kamalwal's case continuing. It thus appears to us that the predominant judicial view, including that of this court, is that for purposes of 54F, new residential house need not be purchased by assessee in his own name, nor is it necessary that it should be purchased exclusively in his name. It is moreover to be noted that, see, the Delhi High Court is telling, in whose name has he purchased? Is she a stranger? Is she somebody who is not at all connected with the assessee? Does the assessee does not know her? The court is telling who he has purchased in whose name? Only name of his wife. Also, there is no dispute at all that the entire investment has come out of the sale proceeds and that there was no contribution from the assessee's wife. Move ahead. This is in case of Gurnam Singh. This is in case of his son. Move forward. Karnataka High Court, this is Jennifer Bide. That is in name of husband. Mir Ghulam Ali Khan, legal error. The word assessee must be given a wide and liberal interpretation so as to include its legal heirs also. There is no warrant for giving too strict an interpretation to the word assessee, as that would frustrate the object of granting exemption. And what is more, in the instant case, the very same assessee, immediately after the sale of house, entered into agreement for purchasing another house and paid a sum of 1,000 as earnest money, and subsequently the legal representative completed the transaction within a period of 1 year from the date of death of the deceased. Sale and purchase are two links in the same chain, and we are fortified in this view by decision of Madras High Court in C.V. Ramanathan versus C.I.T. delivered way back in 1980, 125 ITR 191. The Ram Kumar's case, Hyderabad bench, this is in case of minor daughter. Then you have the Rachna Arora's Chandigarh bench, where the tribunal went as far as telling that entitled to exemption, tribunal is telling assessee is entitled to exemption of entire amount invested by her under section 54, even if the new residential property was purchased in joint name of assessee, daughter and son-in-law. Then this is Bangalore bench decision rendered in case of Krishnappa Jairamaya, where the assessee purchased property in name of his married widowed daughter of the assessee. Assessee has invested the sale consideration on transfer of the capital asset in purchasing a new residential property in name of Shailaja, who is being married widowed daughter, dependent daughter of the assessee, also legal heir of the assessee. Accordingly, we direct the assessing officer to grant exemption 54F of the Act on the amount invested in purchase of residential house in his daughter's name. Issue number 8. Whether assessee HUF transfers a residential house property held in its name and capital gain is invested in purchasing another house property in the name of one of its members and not the HUF itself, whether HUF can claim deduction under 54. Yes, says the Gujarat High Court in PCAT versus Vedya Pannalal Manilal HUF. Deduction in 54 is still available to the assessees HUF. Revenue sole objection is that the sale deed was not executed in the name of HUF, but was in the name of two of the members of the HUF. In our opinion, tribunal was right in coming to the conclusion that this was substantial compliance with the requirement of section 54F of the Act, when neither the source of acquisition of new capital asset nor the account of such new asset in the name of HUF are doubted. Mere technicality that the sale deed was executed in the name of member of HUF, rather not HUF, would not be sufficient to defeat the claim of the deduction. By mere names of the purchasers in the sale deed, the rights of HUF and other members of HUF do not get defeated. If at all, the persons named in the sale deed hold the property of the trust for and on behalf of HUF and other members of HUF. Similarly, in case of Vipin Malik, Delhi High Court did not have occasion to examine this aspect of the matter. So they are going on discussing. In case of Kalia versus CIT, Rajasthan High Court was concerned with very different situation. The court is now distinguishing the judgments. In the present case, the capital asset was sold by HUF and purchased by HUF as reflected in the accounts. Names of two members of HUF shown in the sale deed was only a cosmetic in nature. Issue number 9. Assessee owns one house property in his name and is a co-owner of another house property along with his wife. Derives capital gain and invested the same in purchasing another house. Whether he can claim deduction 54F. Sir, assessee owns one residential house in his name. Co-owner of another house property along with his wife. Now derives capital gain, invests the same in purchasing another house. Whether he can claim deduction 54F. Mumbai Tribunal, Mumbai bench of ITIT says in Rasiklal and Satra, it says that what do you mean by the word own? The word own in 54F means absolute ownership and not merely co-ownership. Therefore, assessee will be said to be the owner of only one house only, and in such circumstances, deduction 54F will be applicable. On appeal, it was contended before CIT appeals that, I am continuing the discussion of Rasiklal's case. On appeal, it was contended before the learned CIT appeals shared interest in property does not amount to ownership of property. Reliance was placed on following decisions: CIT versus Arvind Reddy, Supreme Court, Narayan Chaudhary, Allahabad, Kulwanti, Al-Raja, Mumbai, Abdul Rahman, etc. Learned CIT appeals accepted the contention of assessee, consequently allowed the claim of assessee. Agreed by the same, revenue is in appeal before the tribunal. Now, the court is telling, the tribunal is telling now, share interest in property does not amount to ownership of a residential house in terms of section 54F. According to them, a co-owner of a house cannot be said to be owner of a house. Now, this is what is the counsel of the assessee arguing. He also drew attention to provisions of section 26 of the Act to point out property owned by co-owners is to be assessed in the state of AOP unless their shares are definite and unascertainable. He argued that such shares are not defined in the present case, and as such, no part of the house can be said to be owned by assessee. It is a case of joint ownership where income chargeable tax has to be assessed in the status of AOP only. In support of his arguments, relied on various judgments reported as what we discussed. On the other hand, learned department representative relied on the order of assessing officer. Now, the tribunal is giving the judgment. Question for our consideration is whether on facts, assessee can be said to be the owner of residential house vis-a-vis the flat at Sion, Mumbai. The case law referred to by assessee's counsel is not on the point of issue before us, and therefore we proceed on the basis of language employed by the legislature. The word residence, as per Stroud's Judicial Dictionary, means a place where an individual or his family eats, drinks, and sleeps. Therefore, so house will mean an independent unit where one can eat, drink, sleep. In view of this definition, we hold that the flat at Sion, Mumbai was a residential house, since assessee along with his family was living in that house. Therefore, the only question now which remains as to whether assessee can be said to be the owner of that residential house. In the case of residential unit, none of the co-owners can claim that he is the owner of residential house. Ownership of a residential house, in our opinion, means ownership to the exclusion of all others. Therefore, where a house is jointly owned by two or more persons, none of them can be said to be the owner of that house. This view of ours is fortified by the judgment of Supreme Court in case of Said Banarsi Das Gupta versus CIT 166 ITR 783, wherein it was held that a fractional ownership was not sufficient for claiming even fractional depreciation under 32. Thereafter, new law itself was amended. After the Supreme Court judgment, there was an amendment, section 32. But the tribunal is telling, my dear friends, there is an amendment for depreciation. No amendment in 54F. Whether after the judgment is delivered in the case of Supreme Court in Seth Banarsi Das Gupta, saying what? That where house is jointly owned by 2 or more persons, none of them can be said to be the owner of that house. This view of ours is fortified by judgment of Supreme Court in case of Banarsi Das Gupta, wherein it was held that fractional ownership was not sufficient for claiming even fractional depreciation 32 of the Act. Because of this judgment, legislature had to amend provisions of 32 with effect from 1st April 97 by using expression wholly owned or partly owned. After the judgment of Supreme Court in the case of Seth Banarsi Das Gupta, legislature could also amend the provisions of 54F so as to include part ownership. Since the legislature has not amended the provisions of 54F, it has to be held that the word own in 54F would include only the case where a residential house is fully and wholly owned by associate, and consequently would not include a residential house owned by more than one person. In the present case, admittedly, the house at Sion Mumbai was purchased jointly by associate and his wife. It is nobody's case that the wife is benami of the associate. Therefore, the said house was jointly owned by the associate and his spouse. In view of the discussions made above, it has to be held that associate was not the owner of residential house on the date of transfer of original asset. Consequently, you cannot deny 54F to the associate. Issue number 10. Whether exemption can be claimed under 54 and 54F when capital gains from transfer of multiple properties are invested in a single residential house property. So, with effect from 1516, once the NDA government came to power under the leadership of Modi ji, Sri Arun Jaitley was the finance minister then. Immediately, he made these amendments in the 54F. At that time, that a residential house, meaning of a residential house, includes singular, includes plural, includes many. Therefore, you have a host of judgments starting from Geeta Duggal, Khubchand Makhija, Anand Basappa, KG Rukmani Amma, all your Karnataka High Court decisions, your Delhi High Court, etc., saying what? Assessee can sell one house, invest in 3 houses, invest in 4 houses, in the same building, the 3 flats, 2 flats, adjacent to each other, next to each other, on the different floors, in the similar floors, connected by lift, etc., etc. So all these case laws were rendered redundant with effect from 1st April 15, that is assessment year 1516. Similarly, you sell a property in India, invest in Sri Lanka, invest in USA, Vinay Mishra's case, Karnataka Tribunal and High Court, etc., which gave benefit, Prema Pisha, Leena Jisha, etc., host of judgments are there, were all consigned to the dustbin of history. Why? Because the amendment came. ONE, became what? ONE, one residential house. Was replaced by one, ONE, one. Therefore, the court, Arun Jaitley, in the budget speech as well as, he told that what? I don't understand English now. You have all become very smart. So my English, a residential house means it's only ONE, one residential house. To me, singular does not include plural. Singular will remain singular. Therefore, a residential house, we used to argue, will discuss only the nature of residential house. It does not say how many number of houses. Therefore, that was substituted by one residential house. Further, in India were also added. In India was also added. Therefore, Vinay Mishra's case, in fact, I remember those days, Vinay Mishra's case, assessing officer here in Bangalore was my good friend. Today, I think he's a joint commissioner, Shivanand Kalkeri. And at that time, I won. But thereafter the amendment, in other cases we won, but after the amendment at that time he disallowed, saying that what is the purpose of 54? You are claiming you are a resident of India, you are a citizen of India, you want to invest in India, you sold property in India, but you are investing abroad. What is the benefit to Indian government? I am not going to allow the deduction. Anyway, we won in the tribunal because nowhere the earlier erstwhile section told that in India. Now they have included in India anyway. So those judgments are now rendered OTOs, etc. But what about reverse case? Multiple properties are sold, invested in one house property. multiple properties are sold, invested in one house property. So here, Bipin Sagar's case, I think this is the judgment beautifully argued by our Jagdish Punjabi sir. And then you come to this Venkat Ramana Umareddy, same thing. Assessee during relevant financial year, this Hyderabad tribunal had earned long-term capital gain out of transfer of two distinct and separate assets. One is a plot of land and other is a house property. It is the claim of the assessee that the entire long-term capital gain arising from the sale of two assets were invested in purchase of new residential house. Hence, assessee is entitled to avail both 54, 54F. Whereas the AO has rejected such claim by holding that for claiming exemption 54, 54F, assessee has to invest in two houses. No. In fact, in the facts of the present case, since long-term capital gain arises from sale of two distinct and separate houses, assets, residential house and plot of land, and assessee has invested entire capital gain in purchase of a new residential house, in our view, is entitled to a claim exemption both under 54 and 54F. Court is telling, the tribunal is telling, there is also no specific bar either under 54 or 54F or any other provision of the Act prohibiting allowance of exemption under both section in case the conditions of provisions are fulfilled. Where capital gain arising from sale of two flats were invested in one residential house, such capital gain would be exempted under section 54. Recently delivered judgment 2021 Vijay Kumar Vanchu, Delhi Tribunal, where assessee modified both flats, converted two units as one residential unit. Then assessee has further sold both the flats through two separate sale deeds. It is an admitted fact that assessee has purchased residential flat at Noida within the permitted time period from the sale of residential flats. As the above decisions of ITAT Mumbai bench squarely apply to the facts and circumstances of the case, assessee is entitled for exemption under section 54. Yes. We therefore do not find any reason, this is Bipin Sagar's case, Mumbai 8080, conclusion drawn by learned CAT appeals. Accordingly, order of learned CAT appeals upheld. Assessee was using all three flats as compact unit, as only one electricity bill for all three flats. In any case, issue is also covered by decision of Honorable Bombay High Court in case of CAT versus Devdas Nayak, etc. Acquisition of flats have been done independently. Eventually, they are a single unit for purpose of residence. Execution of separate agreements cannot decide this issue. The appellant's case, AO has not disputed the evidence placed before him to prove that these three adjoining flats were in fact united as one single unit having only one kitchen. However, there is no restriction placed anywhere in 54 that exemption is available in relation to sale of one residential house. Transfer is of one residential house. Three adjoining flats were merged and made it one residential house, not by appellant but by previous owner. Appellant ever since the date of purchase used it as one residential house. There is one electricity meter in respect of three flats. Generally, it may not be possible to find a bigger residential unit, and that requires combining two or more adjoining flats into one unit. However, that does not mean that each flat in itself is a separate residential unit. What is to be seen is that whether the adjoining flats are actually united and are used as a common single unit or not. Execution of separate agreements cannot decide this issue. They are seeing at the sum and substance of the transaction. Larger issue. Flats were constructed in such a way that adjustment units of flats can be combined into one. Acquisition of flats may be done independently. Eventually, there is a single unit and house for purpose of residence. Moving further, whether exemption under 54F can be claimed even if construction is not completed within 3 years. Exemption 54F can be claimed if construction is not completed within 3 years, but when substantial payments has been made. Rightly so held by Karnataka High Court in B.S. Shanta Kumari, Sambandham Uday Kumar, Karnataka High Court, Sardarmal Kotari, High Court of Madras or Chennai. You see in B.S. Shanta Kumari, Karnataka High Court, what are they telling? Assessment here is 910. Exemption in case of investment in residential house construction. Assessee sold property on 610-8. She purchased another, residential plot on 13-10-2008. On 2/6/2010, she obtained approval of building plan from local authority, commenced construction, which was not completed within 3 years. That is on or before 5/10/11. She claimed exemption under section 54F in respect of long-term gain arising from sale of property. Assessing officer normally disallowed the claim on the ground that assessee had not completed construction of house within 3 years as per 54F. Whether once it was established by assessee that she had invested entire net considering construction of house within the stipulated period, it would meet the requirement of 54F and she would be entitled to get benefit of 54F in favor of assessee. Now, where perusal of the said section, said provision does not even remotely suggest that it intends to convey such construction should be completed in all respects in 3 years and or make it habitable. Section 54F is a beneficial provision which promotes for construction of residential house. Such a provision has to be construed liberally and for achieving the purpose for which it is incorporated in the statute. The intention of the legislature, as could be discerned from the reading of the provision, would clearly indicate that it was to encourage investments in the acquisition of residential plot and completion of construction of residential house in the plot so acquired. The essence of the said provision is to ensure that assessee who received capital gain would invest same by constructing a residential house once it is established that the consideration so received on transfer of his long-term capital asset has invested in constructing the residential house, it would satisfy the ingredients of 54F. If the assessee is now able to establish that he had invested the entire net consideration within the stipulated period, it would meet the requirement of 54F, and as such, assessee would be entitled to get the benefit of 54F of the Act. Though such construction of building may not be complete in all respects, that by itself would not disentitle the assessee to benefit flowing from, to take benefit flowing from 54F. Same thing held in Sambandham Uday Kumar's case, and then High Court of Madras, Sardarmal Kotari, etc. In fact, in the instant case, Appellate Commissioner allowed assessee's appeal, noting that the appeal filed by Revenue against the order of High Court of Madras, that is Sardarmal Kotari, before Apex Court has been dismissed on 6th of April 2009, issue number 12. To claim exemption under 54F, whether the investment in new asset or deposit in CGAS should be out of actual sale consideration, or it be out of borrowals or bank loan, etc. Color of money. They are talking about the color of money. Yes. It has been held in the following cases that the purchase of property out of bank loan is not a bar in allowing exemption under 54F. All these judgments. Dr. Kaisa Srinivas, Hyderabad Tribunal, Kapil Singh Agarwal, Punjab and Haryana High Court, Kapil Singh Agarwal, Delhi Tribunal, Sumati Getkudi, Hyderabad Tribunal. If you see this, Dr. Kaisa Srinivas, Hyderabad Tribunal, AO found that the assessee purchased house property by availing bank loan instead of applying the sale consideration for above purpose. We are not in a position to accept the views of the AO, considering the fact that the assessee need not have to utilize the sale consideration in new property. It is enough if the assessee procures new property within the stipulated time provided in 54F to claim the exemption. How the property purchased by assessee is irrelevant. In following cases, Punjab and Haryana High Court has also expressed similar views, and other respective benches of tribunal have also expressed similar views. Similarly, jurisdictional ITAT Mumbai, ITO versus Dinesh Chaudhary, question arose as to whether the deduction under 54 is allowable where the assessee has used borrowed funds for construction of new asset. Case was decided in favor of the assessee. J.V. Krishna Rao's case, Andhra Pradesh High Court, is telling that by securing, you can also make an investment by securing the money spent out of capital gain from other sources available to it by borrowal, or otherwise it is eligible for relief in 54F in respect of entire amount of capital gains realized. Similarly, recent judgment of Keshav Dutt Sridhar delivered by Chandigarh bench. Law does not require the assessee to hold on to the very same money and demonstrate that very same money was utilized in acquisition of the asset, and requirement of law is that the money so available to the assessee to that extent on which exemption under 54 was claimed ought to have been invested in acquisition of specific asset within specific time. The law nowhere requires that there should be a live link between the amount of capital gain and in purchase of the new asset, where the asset is purchased within the stipulated time of filing of return. The law does not require the assessee to hold on to very same money and demonstrate that the very same money is utilized in acquisition of the asset. Requirement of law is that the money is so available to the assessee to that extent on which exemption under 54 is sought to be claimed ought to be invested in the acquisition of specific asset within the specific stipulated time. Reference is also given by the tribunal to Aryama Sundaram's case, Madras High Court, where the court, considering the requirements of 54, held as under. Very beautiful sentences by the court. Please listen carefully. What is the Madras High Court telling? It is axiomatic that 54(1) of the Act does not contemplate that the same money received from the sale of residential house should be used in the acquisition of a new residential house. Had it been the intention of the legislature that the very same money that had been received as consideration for transfer of a residential house should also be used for acquisition of new asset, then 54(1) would not have allowed adjustment or exemption in respect of property purchased 1 year prior to the date of transfer, which gave rise to capital gain, or maybe in the alternative has expressly made the exemption in case of prior purchase subject to purchase from any advance that might have been received for the transfer of residential house, which resulted in capital gain. Then the recently delivered judgment Regi ISO Mumbai Tribunal in 2022. Mumbai Tribunal, possession of new house within stipulated 2 years is purchased for section 54, even if not funded by proceeds of old house. We'll also discuss the issues on possession, booking of flat, etc. Don't worry, even those issues are there. Other decisions favor of assessee, etc. Next, whether the construction of a new residential property can commence or begin before the sale of original asset. Yes, held by Karnataka High Court in Anand Raj, H.K. Kapoor, Allahabad, Subramania Bhatt, Karnataka High Court, Bharti Mishra, Delhi High Court, Saroj Devi Agarwal, Jaipur Tribunal, long back held by Karnataka High Court in Subramania Bhatt. Now, in this case of Anand Raj High Court of Karnataka, it is not in dispute. Assessee sold agriculture land and consideration received is in nature of long-term capital gain. It was not an exempt agriculture land. Therefore, he invested the capital gain on sale of agriculture land. Even before the sale of the property, he had borrowed housing loan, started construction on the site belonging to him. Please understand, even before the sale, you can start construction, but you cannot complete the construction even before the sale of property. You will not be allowed the deduction or exemption in such case. You can commence the construction before the sale of the asset, and then you can complete the construction after the sale of asset within 3 years from the date of transfer. Absolutely no problem. Even before the sale of property, he had borrowed a housing loan, started construction on the site belonging to him. After the sale, amount spent towards construction of the house is more than the consideration received by the sale of agriculture land, therefore entitled to benefit of 54F. Landmark judgment of Subramania Bhatt, delivered way back in 1987, Karnataka High Court. Assessee sold the building on 9th of February 77. Capital gain accruing therefrom was claimed to be exempt under section 54. He had commenced the construction of a new house sometime around March 76. That is before the sale of the building, though it was completed in March 77. ITO rejected the claim for exemption on the ground that construction of new building had started much earlier to the sale of old building, and major portion of the building was let out by the assessee. On appeal, the tribunal found land appertaining to building was in occupation of assessee. Building was used by assessee mainly for essential purposes. New building was completed within 2 years period contemplated under 54. So tribunal allowed relief to assessee. Therefore, court now held as on the date of sale of old building was 9/2/77 and new building was completed in March 77. Date of commencement of construction of the new building was immaterial. Since the assessee had constructed the building within 2 years from the date of sale of old building, he was entitled to relief under section 54. On the basis of evidence on record, the conclusion of tribunal was not unreasonable. Therefore, assessee entitled relief under section 54. Similarly, H.K. Kapoor, etc., Bharti Mishra, High Court of Delhi, all in favor of the assessee. Coming to issue 14. Very important issue. deeming fiction provided for computing full value of consideration as a result of transfer of property as per provisions of 50C is only applicable for determining full value of consideration as defined under 48, thus far and no further. And thus for purpose of computing exemption under section 54F, deeming fiction provided under section 50C could not be enlarged. Take the judgment, recent judgment of Bhaskar Babu Usha of Chennai bench, delivered in 2022, wherein the tribunal is telling there is 50C, there is 54F. What is the purpose of 50C? You determine the consideration as per the gentry value or stamp duty value prevailing, that you compare with the actual sale consideration received. Whichever is high becomes the sale consideration for the purpose of determining a full value of consideration under section 48. Stop there. You cannot impose fiction after fiction after fiction. For 50C, for computation of value of consideration as defined under 48, no problem, sir. They are telling, please, I don't want to render any provision nugatory, unreasonable, unworkable in the Act 50C, determine the sale consideration as per stamp duty valuation, gentry value, etc. Stop there. Don't impose fiction upon fiction. Take that stamp duty consideration and tell me for purpose of, and use that calculation of capital gain even for purpose of exemption under 54 or 54F, net sale consideration here and there, capital gains. The tribunal is telling and the courts are telling, you are asking me to do the unwork, you are asking me to do the impossible thing. I have received consideration only 20 lakhs. As per stamp duty guideline, it may be 40 lakhs. Very fine, sir. But I have not received 20 lakhs. I have received only 20 lakhs. I have not received 40 lakhs. So the other 20 lakhs I have not received. So you cannot restrict my exemption claim 54 based on the calculation of 50C at 40 lakhs. For purpose of 48, they are telling you are very much, within the boundary of the Act, within the legal ambit of the Act. You calculate 40 lakhs 50C for 48, etc. But while computing 54F, start with the sale consideration for only 20 lakhs. The deeming fiction provided for computing full value of consideration as a result of transfer of property as per provisions of 50C of the Act is only applicable for determining full value of consideration as defined under 48 of the Act. And thus, for the purpose of computing exemption under 54F, deeming fiction provided under section 50C cannot be enlarged because one cannot expect a person to perform impossible things. As when an assessee receives a particular amount from transfer of property, he cannot be expected to reinvest amount over and above the consideration received for transfer of property. In fact, that may not be the intention of legislature. If you apply deeming fiction provided under 50C to provisions of 54F of the Act for computation of the exemption, then it is impossible for assessee to fulfill the said conditions because no assessee will have consideration over and above what was received from transfer of property. This principle is supported by decision of ITAT Vishakhapatnam bench in the case of Dr. Chalasani Mallikarjun Rao. Similarly, Sunil Miglani, the Ghaziabad Delhi Tribunal, wherein they relied on host of judgments. Sabita Devi Agarwal 2019, Anand Chetan Agarwal 2018, Rajkumar Parashar, etc., etc. And then the court here, the tribunal is also telling the process of arriving at capital gain and exemption are distinct and separate, and one does not override the other. Very simple, they are telling. 54 is a complete code in itself. 54C is separate. Process of arriving at capital gain and exemption are distinct and separate, and one does not override each other. Section 54F is an exemption provision and a complete code in itself. Since it's a complete code in itself, computation of eligible exemption has to be worked out within its framework as far as possible, and deeming fiction contained in any other provision cannot be brought into section 54F. 54F has to be applied only for the definite and limited purpose for which it is created. Therefore, it is not permissible to subjoin or track a fiction upon fiction. As far as exemption allowable in 54F, one has to strictly follow the provisions of particular section and compute the exemption accordingly without imposing any section creating legal fiction into the section. Post of judgment, sir. Moving further, Capital gain account scheme, issue number 15. So capital gain account scheme, you know. You to closure of NOC, you know that form G you have to take, meet the assessing officer, go there to assessing officer, show him that you have paid the taxes. If you are not utilizing the amount in CGAS, at the end of 3 years, you need to pay tax. Therefore, you want to close the capital gain account scheme, form G is there. Take the form G, appear before the jurisdictional assessing officer, showing that you have paid the taxes 20%, etc. The person will, jurisdictional assessing officer will close the, CGAS account and allow you to withdraw the amount. And if you are not able to utilize the amount lying in CGS, it would be taxable at the end of the 3 years anyway. Moving further, we come to the issues. Yeah. Is there any requirement the assessee should file the return before the due date under 139(1) to claim exemption 54(F), where the assessee had fulfilled the condition for depositing amount of capital gain in a specified bank account before the due date prescribed for furnishing the return of income under 139(1). There is no requirement assessee should file a return of income before the due date prescribed under 139(1). You have definitely deposited in CGS before the due date prescribed for furnishing of return under 139(1). There is no necessity that the return should be filed under 139(1). Again, that is in Mumbai IT80. Again, Chennai IT80, merely because investment is made after due date of filing return, 54F exemption cannot be denied where investment is made prior to filing of return under 139(4). Same thing. Issue 16. Where assessee invested entire sale consideration in construction of a residential house within the stipulated time period, exemption under section 54F could not be denied if the said consideration was not deposited in CGAS during the intermittent period of construction. The 54(1), 54(2), whatever amount not utilized for acquisition, for purchase, for construction, they are telling deposit within the due date. 54(2) is telling please deposit within the due date and CGAS. The issue therefore is I have not deposited a single penny in CGAS, but I have utilized the entire consideration either for construction or either for purchase within the stipulated time period. Courts are telling no problem. Ramaya Dorairaj delivered in 2021 Bangalore bench. It in turn it relied on the High Court judgment of K. Ramchandra Rao, wherein the court, Karnataka High Court, said that where an assessee invests the entire sale consideration in construction of a residential house within 3 years from the date of transfer, can he be denied exemption 54F? This was the question posed before the Karnataka High Court, that when the assessee invests the entire sale consideration in construction of a residential house within 3 years from the date of transfer, can he be denied exemption under section 54F on the ground that he did not deposit the said amount in capital gain account scheme before the due date prescribed in 131 of the Act? Answered by the Honorable High Court as follows. As is clear from subsection 4, in the event of assessee not investing the capital gain either in purchasing residential house or in constructing a residential house within the period stipulated in 54F1, if the assessee wants the benefit of section 54F, then he should deposit the said capital gains in an account which is duly notified by central government. In other words, if you want of a claim exemption from payment of income tax by retaining cash, then the said amount is to be invested in the said account. If the intention is not to retain cash but to invest in construction or any purchase of property, and if such investment is made within the period stipulated therein, 54F4 is not at all attracted. Therefore, the contention that the assessee has not deposited the amount in bank account as stipulated and therefore is not entitled to the benefit, even though he has invested the money in construction, is not correct. Being so, in our opinion, the 54F is a beneficial provision and should be interpreted liberally, and the assessing officer has to see the end utilization of the net sale consideration in the way prescribed in section 54F of the Act. The assessee is entitled for exemption under section 54F of the Act. With this observation, we remit the issue to the file of assessing officer for fresh consideration. Similarly held by Venkata Dilip Kumar versus CAT, Madras High Court. Mere non-compliance of procedural requirement 54(2) itself cannot stand in the way of assessee in getting benefit under 54 if he otherwise is in a position to satisfy that the mandatory requirement 54(1) is fully complied with. That is, I have made investment 1 year before, 2 years after, or within 3 years within the time limit prescribed therein. This court also, Madras High Court in Venkata Dilip Kumar, relied on Karnataka High Court decision K. Ramchandra Rao. Moving further, sir. Next issue. Issue number 17. Merely because the assessee could not obtain the possession of the property within a period of 36 months due to defaults committed by the builder, the assessee should not be penalized and deduction in 54 should not be denied. That 3 years. 3 years they are telling that is for construction, but the builder did not deliver the flat. He did not give me the possession of the flat. Am I at default? I have given every penny of my sale consideration. I have utilized every penny of my sale consideration. I have given it to the builder. That fellow did not, give me the possession of the flat. So within the period of 3 years, property is not constructed, not delivered, not given to me. But is it my fault? Builder did not give me possession. Therefore, at the end of 3 years, are you going to tell, yes, whatever exemption you claimed earlier, you please now, it's a violation of condition. Since you could not get the constructed area, you did not get the flat and therefore pay tax. Held no by all the courts. It has been held in the following cases merely because the assessee could not obtain the possession of property within a period of 36 months due to defaults committed by the builder. Assessee should not be penalized and deduction 54 should not be denied. Balkishan Atal versus CIT 2019 Delhi Tribunal, Mrs. Sita Subramaniam, Madras Tribunal, Satish Chandra Gupta, Delhi, Hila B. Wadia, Hila J. B. Wadia, Bombay High Court. Anyway, moving further. The delay is by reason beyond the control of assessee. Similar issue has come up before various courts where it is held that exemption under 54 cannot be denied in case possession is not granted or purchase deed is not executed by reason beyond the control of assessee. You have to go by facts and circumstances. There are various reasons for the delay by the builder. Learned authorized representative placed reliance on judgment of Delhi High Court in case of Balraj, etc. and placed judgment on host of judgment RL suit Jasveer Singh Rana, Sanjay Khanna, Chandrakant Choksi, Mumbai Tribunal, Ritesh Kumar, etc. Chennai High Court, Raghunaman, etc. Move further. Only issue is that the assessee, if you see here, this is what we are discussing, only one judgment, the Balkishan, and let us, in which the court has, the tribunal has relied on host of judgments. Only issue is that the assessee could not obtain the possession and got purchase deed executed within period of 3 years. Delay was on account of developer and not on account of assessee, where we find that the complaint filed by La Tropicana Resident Welfare Association against the developer with National Consumer Dispute Redressal Commission. Thus, the fact that delay in obtaining possession and getting purchase deed executed was on account of developer was by reason beyond the control of assessee. Move forward. Issue number 18. Whether the amount of capital gain utilized in purchase of property within the due date of filing return under section 139(4) would qualify for deduction under section 54(F). It is not 139(1) but 139(4). Yes, as held in the courts are telling in the following cases, the amount of capital gain utilized in purchase of property within the due date of filing return under 139(4) would qualify for deduction under section 54 of the Act. Although the words are 139(1), they are telling even 139(4), it would qualify for deduction in section 54. Shankar Lal Chaini, Rajasthan High Court, Jagrati Agarwal, Punjab and Haryana High Court, Jagtar Singh Chawla, Punjab and Haryana High Court, Fatima Bai, Karnataka High Court, etc. Host of judgments are there. Umayil Annamalai, Madras High Court, Rajesh Kumar Jalan, Guwahati High Court, etc. Vrinda P. Isaac, Karnataka High Court. To see the judgment, Mumbai bench, 2019, Neelima Abhijit Tanu. Clear that only 139 of the Act is mentioned in 54(2) in context that unutilized portion of capital gain on sale of property used for residence should be deposited before the date of furnishing of return. 139 of the Act, in our view, 139 of the Act cannot be meant only 139(1). This is what Mumbai Tribunal is telling. But it means all the subsections of 139 of the Act. The provisions of 54 are beneficial provisions and are to be construed liberally, as has been held by coordinate bench of ITAT Chennai in the case of ACAT versus SMT, Umayal, Annamalai, etc. Tribunal is also going on to discuss cases of Jagtar Singh Chawla, 54(F) deposit in capital gain account scheme by section 139(4) correct due date, Rajesh Kumar Jalan, Guwahati High Court, etc. The entitlement of exemption under 54 relates to cost of acquisition of new estate in the nature of a house property for the purpose of his own residence within the specified period. If the assessee fulfills the condition for exemption under section 54 within the extended time of filing of return under 139(4) of the Act, assessee is entitled to exemption under section 54 of the Act. Accordingly, the assessee is entitled for deduction under section 54 of the Act for utilization of sale consideration for investment in new residential property within due date as stipulated under 139 of the Act, has already held that 139 of the Act cannot be meant only 139(1), but means all subsections of 139(1) of the Act. What about booking of flats? Next issue, booking of flat is to be considered as case of construction for purpose of 54. It has been held in the following decisions that booking of flat with private builder is to be considered as a case of construction for purpose of 54 of the Act. RL Sood, Hila JB Wadia, Ram Prakash, Mia, Bazaz, Usha Ved, etc. Recent judgment of Mumbai bench, Yogesh Mavjibai Gala, 2020. What is it? The tribunal is telling, first, we shall now advert to the issue as to whether or not the AO had taken one of the possible view as regards entitlement of assessee for claim of deduction 54. There is no more confusion, sir. This issue is no longer rest in decra, decided by the court. Very beautiful judgments are there. Very beautiful reasoning is there. In this, the Mumbai bench is telling, let us first observe the view taken by AO that the date of allotment of flat, that is 22/20, was to be taken as the basis for calculating period of holding by assessee on the date of framing of the assessment, was supported by order of jurisdictional tribunal, that is ITIT Mumbai bench in Vandana Rana Roy. Then, in this case, the tribunal observed that the date of allotment was to be reckoned as the date for computing holding period for purpose of capital gains. Again, in Richa Bagdoria, Mumbai, the jurisdictional tribunal, Mumbai tribunal, held that in case of sale of flat, it is the date of allotment of flat, not the date of giving off possession of flat, which has to be considered for computing period of holding period of 36 months. We further find that the Honorable High Court of Punjab and Haryana, in the case of Madhu Kaul, also held that the mere fact that possession of flat was delivered later does not detract from the fact that the allottee was conferred a right to hold property on issuance of allotment letter. It was further observed that payment of balance installments, identification of a particular flat, and delivery of possession are all consequential acts that relate back to and arise from the rights conferred by the allotment letter. On the basis of our aforesaid observations, we are of a strong conviction that the view taken by AO that the period of holding of aforesaid property was to be calculated on the basis of allotment letter that was issued to the assessee by the builder, etc., can safely be held to be a possible and plausible view that was found to be in conformity with the view taken by jurisdiction tribunal, also that of the non-jurisdictional high court on the date of which assessment was framed by him. Take now the judgment of Akshay Sopti, Delhi Tribunal. We note that it has been clarified by CBDT in circular number 672 dated 16/12/93, in which it has been made clear that the earlier circular number 471 dated 15/10/86, in which it was stated that acquisition of flat through allotment by DDA has to be treated as construction of flat, would apply to cooperative society and other institutions. Builder would fall in the category of other institutions as held by Mumbai bench of tribunal in case of Assistant Commissioner of Income Tax versus Sundar Kaur Sujan Singh Gad, and therefore booking of flat with the builder has to be treated as construction of flat by the assessee. So booking, the tribunal telling, has to be considered as construction of flat. Thus, in the present case, the period of 3 years would apply for construction of new asset from the date of transfer of the original asset. Above circulars are binding on revenue authorities under section 119 of the Act. Reference is also made to Honorable High Court of Bombay in the case of CAT versus Hila JB Wadia, wherein the Honorable High Court has held it is a case of construction Reliance is also placed on judgment of Honorable Karnataka High Court in the case of J.R. Subramania Bhatt, wherein it has been held that it is immaterial whether the construction of new house was started before the date of transfer. It should be completed after the date of transfer of original house. That is the other issue in the tribunal anyway. It has therefore to be considered as case of construction of new residential house and not purchase of flat. Since the flat has been allotted to assessee by the builder, who would fall in the category of other institutions mentioned in the circular, it has to be taken as a case of construction of residential flat and not as a purchase of residential flat. Very simple. Move ahead. Next issue, sir. Possession. You saw booking of flat. We saw sale agreement. Now possession. Issue number 20. Now, Delhi High Court judgment, in Ashok Kumar's case, rendered in 2021, 125taxman.com, whether where assessee sold, transferred a property on 24/2/14, purchased another residential house on 19/2/13, since the seller had taken back physical possession of property from the assessee from 19/2/13 to 19/4/13. Very good judgment. Please understand. See, assessee has sold property on 24/2/14. Another residential house was purchased on 19/2/13, 1 year before the date of transfer. This is more than 1 year. See, this is more than 1 year. So what has happened is, sold on 24/2/14, purchased another residential house on 19/2/13. Since, and what has happened in interim, seller has taken back physical possession of the property from the assessee from 19/2 to 19/4. And then handed over possession of property on 19/4. When I take this handed over possession on 19/4, compare with 24/2, it is less than 1 year, sir. So date of final possession of property would be 19/4/13. Tribunal, so Delhi tribunal, they asked him, hey, why did you take back the property? You have executed the sale deed. So why did you take back the property again? And why did you keep for 2 months and then give back? You wanted to claim the exemption because you wanted to bring it within 1 year? They are telling why physical possession, why possession is very important here. Why? Court is telling you justify. Why did you take over the property? So therefore, they are telling here, sale deed was executed, copy of supplementary agreement, etc. It is specifically mentioned that seller has taken back physical possession of property in question from assessee, dated 19/2 to 19/4 for finishing and completion of the pending work of the above said property. And after completion of the entire work, first party will hand over physical possession of the property to the assessee on or before 19/4/13, and they produce photographs of the property saying that the pending work was there still, finishing completion of the work. Photograph of the property in question is affixed, which clearly reveals that the property under sale was incomplete and renovation work was going on, and as such it was not in a habitable condition. Due to this fact, supplementary agreement was executed for completion of work by the seller. It would therefore strengthen the submission that of the assessee that physical possession of property after completion of the entire work was handed over to the assessee on 19th April 13. Don't tell me I have given you this tax planning. This is there in the tribunal's order on 19/4/13, and as such it would fall within 1 year before the date of transfer of property. Therefore, assessee would be entitled for deduction under 54. Similarly, very important judgment here of ITAT Mumbai bench in case of Ramita Mahendra Mehta, wherein para 6 to 11 it's stated as under. So if you see here, the contention of assessee was that though the agreement was entered into on 18/8/7 for purchase of new flat, when is the possession given? Final possession of the property for occupation received from the builder only in the month of March 9. Agreement entered into on 18th August 7, fine. Final possession given only in March 9, though the entire purchase consideration already paid by 11/7/8. So what is the date? They are telling, yes, March 9 you got the possession, sold on 11/9/9. Therefore, it is 1 year before, within 1 year, and exemption 54 is allowed. Date of final possession given by the builder has to be taken as the date of acquisition of new property for computing capital gain under 54 of the Act. The bench has gone and explained very beautifully. These are all the paragraphs there. All the paras I have incorporated in this slide. Moving further, wherein the bench also relied on coordinate bench in the case of Basti Malke Jain. Again, a very beautiful judgment, Mumbai, tribunal. Again, in turn, it relied on the judgment of Mumbai tribunal in case of VM Dujodwala, wherein the honorable tribunal considered the facts. Construction was completed at a later date, and on 24/11/79, builder expressed desire to offer the possession of flat. That is the first date when the property at best can be said to be purchase of residential property. He finally submitted that on 9th April 80, on which date the builder agreed to give possession of flat, would be taken as the date on which assessee has purchased the property for the purpose of residence within the meaning of section 54. Till such time, he had only the right to purchase house property, he added, etc. And also they relied on the judgment of Purushottam. Yeah, Purushottam Govind Bhatt's case. And again, at the end, Honorable Bombay High Court in Bina K Jain, 217 ITR 363 Mumbai, wherein the Honorable Mumbai High Court taken a similar view, saying that agreement for purchase of new flat entered into more than 1 year prior to sale, petitioner is not entitled to, etc. That is a tribunal contention, held that the relevant date in this connection, July 29, 1988, when petitioner had paid full consideration amount on flat becoming ready for occupation and obtained possession. This has been taken by tribunal as date of purchase. So the court is telling, tribunal has looked at the substance of transaction, come to the conclusion that the purchase was substantially affected when the agreement of purchase was carried out or completed by payment of full consideration on July 29, 88, handing over possession of flat on the next day. In such circumstances and in given facts of the case, and also this only one judgment, my dear friends, the Mumbai judgment, and also the Mumbai judgment beautifully also has distinguished the decision of Gujarat High Court in Jindas Panchan Gandhi, wherein the tribunal telling in that issue it was deduction 80T, and also whether asset is short term, long term, not the claim of deduction under 54. Therefore, in such circumstances, in given facts of the case and also the case law relied on by learned counsel of RRC, in case of VM Dujodwala, coordinate bench of this tribunal, and also Bombay High Court in the case of Bina K Jain, we are of the view that the assessee's claim of deduction 54 of the Act is to be reckoned from the date of handing over of the possession of flat by the builder to the assessee, that is 11 September 9. And if we take the date, assessee is entitled to deduction 2054 because the assessee has sold a residential flat on 24/2/10, which is therefore 1 year before the date of transfer. Allow the assessee's claim accordingly. Moving on to the next issue. Issue number 21, 247(6) with 54F. So this is judgment of A.N. Ramaswamy in Chennai Tribunal. A bare reading of 247(6) shows that the agreement or arrangement which has the effect of transferring or enabling the enjoyment of immovable property has to be considered as transfer in relation to a capital asset. In this case, there was a perpetual lease agreement for unlimited period. Assessee was in possession of residential house. Therefore, tribunal is of considered opinion in view of the definition found in 247(6). Transaction of perpetual lease agreement by which the assessee took possession of the property for unlimited period has to be construed as a purchase within the meaning of 54F. Furthermore, 269 UA23 class F, subclass F of the Act clearly says that any lease for a term of not less than 12 years and includes holding possession of such property thereby taken has to be construed as a transfer. Of course, this in context of purchase of property by central government in case of transfer anyway. What about your claim of 54F on flats received on redevelopment? So Mumbai bench, Satish S. Prabhu, etc. Then you have, again, Jitendra Kumar Madan versus ITO, Mumbai bench, etc. Exchange of old flat with a new flat and a development agreement amounts to construction of new flat for purpose of claiming deduction 54. Yes, tribunal is telling exchange of old flat with new flat to be constructed by builder under development agreement amounts to transfer and 247. Acquisition of new flat under a development agreement in exchange of the old flat amounts to construction of the new flat. Provisions of 54 are applicable and assessee is entitled to exemption if the new flat had been constructed within a period of 3 years from the date of transfer. Also, the tribunal also relied on the Bangalore bench decision in Abbas Ali Shiraz, wherein here the tribunal is telling the fact is clear, unambiguous. Therefore, to say assessee's case falls for requirement of acquisition of new residential property within 2 years is contrary to the requirements and condition envisaged in 54. It is noteworthy that as per developers agreement, assessee is also party to the development of said property into residential apartment complex with the developer on joint development basis. Therefore, under circumstances, it will be proper to consider period of 3 years for the applicability of section 54 of the Act in case of assessee, which the assessee has fulfilled. Therefore, benefit of 54 is allowed to the assessee. Issue number 23. Absence of OC or occupancy certificate. Held in the case of Zakawala Masood, Bangalore bench delivered in 2020. CIT appeals has gone by the fact that there was absence of OC. In our opinion, this will not be a ground to deny the claim of assessee for deduction in 54 of the Act, as other evidence filed by the assessee sufficiently demonstrates that the assessee has constructed a residential house within the period of stipulated by law. Findings of the CIT appeals in this regard are very vague and cannot be the basis to deny the claim of assessee for deduction under section 54 of the Act. We therefore hold that the assessee is entitled to deduction under 54 and consequently no long-term gain is eligible to tax addition is deleted. Issue number 24. What about deemed cost of new asset? Means the amount which has already been utilized by the assessee for purchase or construction of the new asset, or does it include the amount deposited as per requirements of 54F4 delivered by judgment by Delhi Tribunal in Vikas Singh? Whether deemed cost of new asset means the amount which has already been utilized by assessee for purchase or construction of new asset, also includes the amount deposited as per requirements of 54F4. Deemed cost of asset is amount which has already been utilized by assessee for purchase or construction of new asset plus amount deposited as per capital gain account scheme 1988. No doubt about it. Issue number 25. Cost of residential house purchase is entire cost of house. Hence, where there were separate agreements for sale of house and sale of furniture. Please understand carefully. Sale of house agreement separate, sale of furniture separate agreement. Whether cost of residential house purchase is entire cost of house, hence whether there are separate agreements for sale of house and sale of furniture, assessee's claim for deduction 54 will be allowable in entirety. Judgment of Rajat B. Mehta in Ahmedabad Tribunal. 90taxman.com. Cost of residential house purchase is entire cost of house, hence where there were separate agreements for sale of house and sale of furniture, assessee's claim for deduction 54 would be allowable in entirety. In this case, Rajat Mehta, non-resident Indian, sold his property at Vadodara and invested 78 lakhs in another property and claimed deduction under 54. The assessing officer noticed that the assessee had entered into 2 separate contracts, though on the same date. One for 60 lakhs for purchase of house property, other one for 18 lakhs for purchase of furniture and fixtures in the said property. Why entered into 2 agreements? Obviously, they wanted to pay less stamp duty, etc. Assessing officer thus formed the view that the expenses incurred on buying furniture could not be said to be expenses incurred for making the house habitable. 60 lakhs, I have no doubt, sir, you are going to get 54. Forget 18 lakhs because that is only for furniture. I can't tell that the furniture expenses incurred would make the house more habitable. Hence, I am not going to allow to the extent of 18 lakhs. 54 is the view of the assessing officer. Therefore, to the extent of 18 lakhs being the amount paid on separate agreement for furniture and fixtures, assessing officer declined 54. For the Honorable Ahmedabad Tribunal, 2 questions are formulated on the facts and circumstances of the case in favor of the assessee. Whether the cost of residential house is entire cost of house and cannot be open to the AO to treat only the cost of civil construction as cost of house and segregate cost of other things as not eligible for deduction 54 of the Act. Whether even if the assessee were to buy the house without any furniture, consideration would have been the same. Therefore, 2 agreements could not be considered in isolation and splitting of consideration was only an artificial arrangement. Assessee's claim of deduction in 54 for investing capital gains in residential house along with furniture and fixtures during relevant years thus allowed in entirety. See, the Reasoning given by tribunal. The tribunal listed out the entire items of furniture sold through the second contract of sale and also noted at para 8 that department representative was fair enough in not really being very aggressive in disputing our perspectives on artificial splitting of contracts. Though the assessing officer was of the opinion that clearly assessee has executed separate deed for sale of furniture just to save stamp duty, and now the assessee is trying to evade income tax, the following observations made by tribunal at para 8 clinched the issue in favor of the assessee in getting deduction of 18 lakhs, which was denied by lower authorities. This is now the decision of the tribunal. Tribunal is telling here is a non-resident Indian who decided to sell a fairly spacious house in his hometown and yet to keep his India connection alive, invested a part of the sale proceeds in a smaller residential unit. But he has been declined the legitimate deduction under 54 in respect of the same only for the reason as the circumstances suggest that he made an unwilling party to artificially splitting of sale consideration to minimize the capital gains burden of the seller. More so, the case pertained to 54 benefit claimed by assessee on purchase of residential property consequent to sale of old residential property, and the issue did not pertain to taxability of capital gains in the hands of the seller. The additional facts that worked out in favor of the assessee were that he was an NRI, and that neither cash payment was made nor cash deposit was found in the books of NRI. Now issues on 54 is. Suppose minor has transferred an asset, will the exemption under 54F, 54 EC also will be allowed to the minor or the parent? ACIT versus Madanlal Basi 2004 Chandigarh, minor has transferred an asset, will the exemption 54F, 54 EC be allowed to the minor or the parent? Provisions of 64(1)A, that is clubbing of income of the minor with the income of the parent, have to be applied in the end after computing income of the minor and the Income Tax Act. Where proceedings under the Act for assessment of income of a minor child are required to be taken, minor child can be treated as an assessee under 2(7) for purposes of section 54F. Benefit under 54F cannot be denied to minor child on the ground that father of the minor child has a residential house at the time of transfer of capital asset. Again, Rajiv Goyal's case, Kolkata IT80. In case of clubbing of income of minor child, deduction 54 EC is to be allowed on minor's income from long-term capital gain. Separately, only net income is to be clubbed. What is the date of investment in respect of 54 EC? Hindustan Unilever case, Bombay. For the purpose of provision 54 EC, date of investment by assessee must be regarded as the date of which payment was made and received by National Housing Bank, etc. Whether the benefit of 54 EC could be availed where bonds are purchased in joint name, Jennifer Bide, Karnataka High Court. Merely because bonds are in joint name, assessee could not be denied benefit of deduction 54 EC as far as established that complete consideration has flown from the assessee. Benefit could not be denied on this ground. Can exemption and 54 EC be claimed where RRC bond were purchased prior to date of sale of property? Daksha Ben Patel, Ahmedabad IT80. 54 EC clearly states investment in specified bonds is to be made within a period of 6 months after the date of such transfer. Intention of the legislature is clear. Had the legislature wanted to give liberty to assessee to invest before or after the date of transfer, they would have explicitly said so, as has been provided in 54 and 54F of the Act. Since specific words are not used in 54 EC, deduction may not be allowed. Can you claim EC and F simultaneously? Yes, sir. 54 EC cannot be denied on the ground that assessee has availed exemption 54F, also in respect of part of capital gains, the famous judgment of Deepak Beda of Mumbai.
One house as per specified in 54F is for the new house only, or it means the assessees owning one house cannot avail the benefit of 54 under 54F?
No, other than one house, no. Other than the new house, he can hold one house.
No, that means one. Suppose I already have 3 houses. I sell one of the houses.
Yeah.
And then buy one more house.
Yeah.
Will I be allowed, or I will be said?
No, 54. No, that is 54. It is. The one is used where the word one is used. 54 and 54F. That is basically the distinction. Definitely, I can sell and invest.
Okay. I've utilized 80% of the net consideration for purchase consideration of a new property within the stipulated period. Whether I am eligible for proportionate deduction?
100%, sir. Proportionate deduction. Balance, you will have to tax it anyway at the end of 3 years.
Yeah.
Yes, sir.
Can the deposit in CGAS be withdrawn in full before 3 years? If yes, in which year capital gains would be taxable? Year of withdrawal or third year?
See, I will tell you. I will tell you. It's a very interesting question. There is a tax planning in this. For example, the sale of property took place last year. Now, this year, what has happened? Finance Act, you sold a property last year, you are going to deposit in CGAS in this year. What happens the next year I want to withdraw? By this budget, finance ministers reduce the rates of surcharge, education sales, etc. Surcharge basically. So I may have a benefit there because the question asked is within 3 years, can I withdraw the amount of capital gains? Just go to the assessing officer, tell this is, this is what I've invested, sir, capital gain account scheme, say about 1 crore. I don't want to now invest in the house. I'm going to pay the tax. So next year when I pay the tax, because there's a budget amendment, my surcharge is reduced now, say only 15%, etc. So I am going to say the assessing officer, yes, sir, I'm going to pay the tax, show the challan, give form G, and he may withdraw. You need not discuss the section over there. So definitely, if the assessing officer wills, if he closes the account, you can go withdraw the amount happily and come. If you can get the form G signed by paying 20% of the tax, and you can close the account.
But in the same year, sir, I will have to pay the taxes. I cannot.
Yes, sir. Yes, sir. Next year, not in the same year. Yeah. The year in which you want to close.
Correct. Sir, one more question is tenancy premises redevelopment into ownership, how taxable? So 54F should be allowed as
100%, sir. 100%.
Yeah.
100%.
Now you spoke about the occupancy certificate. Suppose if the occupancy certificate is not available, then in such a situation, the case law says that I can rely on other documents. What are all the other documents, sir? Whether it is
your electricity bill, take your electricity bill, take a certificate from the builder or architect, from the engineer, chartered engineer. From chartered engineer, take a certificate. There is a Karnataka High Court judgment, sir, Retina Properties. It is not there in my presentation. There is a Karnataka High Court judgment, Retina Properties. Take certificate from the engineer, take certificate from chartered engineer, take certificate from the architect. No problem.
Yeah. The second question is, sir. Hello?
Yes, sir.
Yeah, the second question is, that a property is to be completed within a period of 3 years. What happened in this case? The property is, not completed within the period of 3 years.
Okay, no problem. Still, you will get the exemption.
You have
sale consideration.
Not also commenced within the period of 3 years. However, he paid the money to the builder.
You have paid the money to the
builder.
But property, construction itself not commenced.
Yes, sir.
Then it may be difficult, sir. But there are some case laws I have cited there. These are all, let me tell you again, all these case laws are not for tax planning. If you are stuck, then only you have to use these case laws. Just on these case laws, kindly don't do the tax planning.
Use it as a defense.
Yes, use it as a defense, that's all.
Yeah, Naveen ji has also cited that Hila Wadia, Bombay High Court.
Yes, sir.
There also, the Bombay High Court has said, so in so many words, whatever you had to do, you have done it. You have made substantial payment. Because there is a delay from builder side, exemption will not be allowed.
Correct.
Yeah. Sir, this first issue you have raised, part was residential and Indore tribunal, and part was used for this commercial. So only proportionate. So only proportionate.
Only for residential purpose, sir. Only to the extent of residential only.
Yeah.
Right.
Then, sir, this Sanjeev Lal, of course, you have said and you have cited some. It is followed in some cases. But in Chambers Journal, after this judgment, many people have said that this is not a good law. Mere agreement will not create a transfer. Otherwise, there can be a problem when it comes to capital gains tax liability.
No. This is only for the limited purpose of claiming 54F.
That is what they have said.
Yes.
Yeah, that is what they have said, and in that also it was there. Otherwise, for taxing capital gain, it cannot be applied.
Yes, sir. Yes.
So, yeah. 1 second. Sir, this shared interest, even if you own your co-ownership in the other property, it will not be regarded as you are owning the house.
Correct.
Then what will happen when I claim exemption under section 54 and I claim part ownership only. I purchase with some other co-owner, then what will be the position as regards the allowability?
That is what the court was telling is you will not be regarded as owner. Therefore, if you already you are having two houses, you are purchasing the third house. Therefore, it is not considered that you are having three houses now.
No,
You are
that is,
having
I am
one
saying,
house plus one shared.
I am saying now reverse way.
Okay.
I have sold some property
Fine.
and I am purchasing some other property
Okay.
along with some other co-owner.
Yeah.
So then that
You are
then there
telling
can
anyway
be
you are not the owner, so you will not be allowed deduction at all.
yeah. That can be a problem there. No?
That is, yes, sir.
So
Department
how
may
far
raise
that
those
judgment
issues.
is correct? How
Yes,
far
yes,
that judgment is correct? We have to see.
Yes, sir. Yes.
You are not, even if you have co-ownership right, you are still the owner to the extent of that share.
Correct. Correct.
Yeah. Of course, for this, whether you can claim out of borrowed funds, just for the participant, there is a Bombay High Court jurisdictional High Court judgment in the case of Dr. P.S. Pasricha.
Yes, sir. Yes, sir. I have
Sir,
cited that.
54F and 50C, you have very well summarized that. Means merely 50C cannot be applied in case of 54F, because in the wording in 54 and 54F is different.
Correct.
While computing capital gains tax, you have to go to under section 54 for claiming that. You have to go to section 48, and section 48 talks of 50C. So there it will be difficult. And Bombay High Court in one case of Jagdish Dabalia, they have taken a view against, and they have given the reasoning also that is not possible.
Correct. I have tried to compile, sir. Basically, I have tried to compile only case laws which are in favor of the appellant.
Yeah, you are
There
right.
are
I
no doubts.
appreciate.
Yes.
I appreciate, sir. Yeah,
Yes.
yeah. And once this purchase before 1 year, you rightly said date of possession is relevant. But
Correct.
then on what amount I will be allowed? Only investment in that 1 year, last 1 year, or suppose the agreement was entered 2 years before, then that second year's investment will also be allowed.
There is a dispute, sir. Courts will tell only up to the date of possession only. Yes. Only up to the date of entering into agreement only. Correct.
No, that means only in that last 1 year. Correct.
Correct. Last 1 year, exactly.